Hi guys, it's Stephen Edwards, aka the Xero guy. Today I want to do a nice short and sweet video about bank reconciliations in Xero. So as always, when I do a video on something to do with Xero, I like to give a bit of background and a bit of context. There's a lot of jargon in the industry in terms of what is bookkeeping. I'm probably going to do a video on what is bookkeeping in general to take the myth away. What does that actually mean? And it's the same around bank reconciliation. So a bank reconciliation, essentially all we are talking about is when the money goes in your bank, when the money goes out your bank, what is it for? That's pretty much what bank reconciliation is. It can get a little bit more complicated, but in most simple terms, it's you've got money coming into your bank, money going out your bank. What is it for? So money coming in from the director, putting money into your business bank account would be money from the owner. So that we call that capital introduce, or it's for a director's loan account, it's money you're putting in. If it's money from a customer, it's money for sales. So really you just have to choose the right category to kind of classify it, to choose what does it relate to. And that's where the little bit of knowledge, and sometimes that's where the overwhelm kicks in, because people don't know if they're putting it to the right account. But to be honest with you, as long as you're putting it to the same account, even if it ends up being the wrong account, it's not the end of the world, because on Xero, you've got a really handy feature, which I'm going to share on a different video, called Find and Recode. We can actually move it later on, or your accountant, your bookkeeper can have a little review and a check in terms of what you've done yourself. So you go into a dashboard. This probably looks quite familiar. If it looks a little bit different, it's because you can edit your dashboard and you can change your widgets and look at different things. The most important thing in my eyes is your reconcile items. So, how many items have pulled through from the bank into Xero and you've not told Xero what they're for. That's what this is. And the reason you want to keep on top of this is so that your Xero is up to date, so that your Xero reflects the right amount of sales, the right amount of expenses, and just gives you you can run better reports. I think in my first overview video, I've done a video on some of the reports you can run. The other thing that's really important on this dashboard are the invoices owed to you. Because if this is genuine, if this is real, if I'm owed 14,733 from my customers and 10,533 is overdue, I'm going to want that money ASAP, because it puts pressure on your cash. But anyway, let's dive into reconciling your bank. If you click on this, reconcile 25 items. So we've got your statement balance and we've got your balance in Xero. And often the difference is because you've got unallocated transactions. So everything we can see here, the 25 items, often that's going to contribute to the difference between the statement and the balance in Xero. There can be some more exceptions and some other cases for differences, but most of the time it's going to be what we call unreconciled items, or items that need reconciling. So we've got some money coming in. It says received. So think of the left-hand side of the screen as your bank account. Basically, it's your bank statement. It's really a mirror image of your bank statement. It might not look exactly the same because you might have reconciled the odd item and left certain items because you're not sure what they're for. But essentially, if you've done nothing, it will be a mirror image of your bank account. So on the left-hand side of the screen, we're saying we've got money received. And the right-hand side of the screen is where we decide to allocate it. That's simply what we're doing. So we've got £100 coming in from City Limousines. In this example, it's not matching up green. So that means it's not automatically recognising what this £100 for. So we've got a little bit of a description. So if you raise sales invoices in Xero, if you don't raise sales invoices, you can ignore this. But if you do raise sales invoices in Xero, what you want to do when your money comes in is you want to match it against the sales invoice you've raised. A lot of people we see doing their own bookkeeping get this wrong, because they go into the invoice itself and they mark it as paid before the money's even gone into the bank, and that can cause all sorts of issues. So what you want to do is match it from this reconciliation screen here. So we've got 100 quid. Let's try and see if we can find something that relates to. So if we go to match, and we're going to do a search for City Limousines. and we're going to get some information for Seat Limousine. So we want to try and find, we can see there, invoice number 17, invoice number 17. So it actually says part. So what they're telling us, this is actually a slightly more complicated example. We're saying they're paying part of invoice 17. Why you'd pay 100 quid instead of 250, I don't know, but you know, that's what's happening. So in this example, we've got a part payment, okay? So if this said 100 quid, it would probably match green in the first place, and I'll show you some of those in a second. But because it's only £100 from 250, we click that, we click split, and we say, right, how much of it are we paying? Well, we're paying 100 quid in. That's what we've received from our customer. We're going to split that, and now it matches. So what would be left if we looked at the invoices in Xero, invoice number 17, there'd be £150 left still to pay. So we've got a deposit here from Maple Systems. I'm on the demo account, by the way, if you're wondering where these numbers are coming from. So let's do the same thing. Let's just see if this relates to anything, because even though it's a deposit, you could still invoice for a deposit. We do, you know, at CTA Accountants, we still invoice, but it might not have been the case here. So let's just do a search for this customer. Do a search here. Jacaranda, it's not finding anything. Okay, so what you could do, and personally I would do this, I would still raise an invoice if you've got a deposit, and then you just match the invoice against the deposit. It's all good, it matched green. But in this example, there is no invoice for the deposit. So we've got two options. We can go and raise an invoice, but it's a bit long-winded. I'm not going to do it in this because we don't have to. So what we could do is we can simply allocate the money straight from here and forget the invoice. And if you don't use Xero invoices, this is the sort of thing you would be doing anyway. So we're going to create, we're going to type in the customer name, Jacaranda Maple Systems. So for most people, when you get money in from a customer, it's going to be sales. You might just have one sales category. You might have multiple sales categories. I've got a video on chart of accounts if you want to know more about how to set that up. So a lot of the time you might put it to products or services, and you can do that. This is where it gets a bit more technical because it's a deposit. It's money in advance. So you might actually put it to a different category. Here we go. So you might put it somewhere in your balance sheet for accruals. But I wouldn't worry about this because this is where it gets a bit overwhelming and a bit technical, as I mentioned, because you don't need to be an accountant. Because I'm an accountant, I know that we could treat this slightly differently because it's a deposit for probably work that's not been done. If you are doing your own bookkeeping and you've got a deposit, most of the time I would just put it to sales. So if you've got sales products, sales services, whatever sales category you got, put it there, and then it's your accountant's job at the end of the year, at the end of the quarter, to have a look at any deposits you've received where you've not actually done the work and there's a slight accounting adjustment to make there. So we're going to assume this company is VAT registered. So we're going to say it's 20% VAT on income. If you are not VAT registered, just put no VAT, that's fine. I don't need to worry about it. All good. Now we've got money going out. We've got a fee. Let's pretend this is a bank fee. Okay, it's already done it for us because a lot of the time Xero's clever. It will remember what you've been doing. You can actually create rules. So you can actually click options, create a bank rule, and it will flash up a slightly different color. I think it's green to do that all the time. Or you can just simply say, right, I'm happy with who we're paying, Ridgeway Bank. I'm happy what it's for. It's for bank fees, or you can choose something else if that's not the case. Why? If you want to put a little bit of description, that's all good. Press OK. That's all you need to do. You can also create bank rules. I'm going to do that on a separate video to keep this short and sweet. And you just create a bank rule, but I will cover that, as I said, later on. And that's pretty much it. I can obviously go through and I can do the bookkeeping. No one's paying me to do this bookkeeping. It's a demo. I just want you to get the picture. 7-Eleven, let's pretend this is for fuel. There's actually a rule already in place. So we can either go ahead with that rule or we can tweak it. But I'm going to look at this rule. So I'm giving you a little bit of a kind of a head start, a preview into bank rules. I'm just checking where it's going. It's going to general expenses, 7-Eleven, 20%. Yeah, to be honest, I probably need to do different videos about VAT Because the problem with putting something to general expenses is it could be anything. It could be a bottle of water. I mean, obviously expensive water. There could be, 12 bottles of water. It could be petrol. It could be different things. And there's not always VAT on everything. So that's why ideally you still want a receipt, which I will cover in more detail. But for today's video, I really just want to show you how to reconcile on Xero. If you've got more questions in terms of, do I claim VAT on this? What category does it need to go to? How do I get the receipts into Xero? Then that's something we can look at for you later on. Okay, thanks guys. If you want any more subjects covered, please give me a comment, reach out to CTA accountants. I'm more than happy to do some content that you're going to find useful.